They always believed that I'd stole 2.2 billion Singapore dollars.
One of the greatest financial disasters of the century was announced to an astonished world. Britain's oldest merchant banks had collapsed with debts of almost £1 billion.
Tonight, the man who broke the bank, Nick Leeson.
Nick Leeson, who found infamy as the rogue trader who brought about the collapse of Barings Bank.
The headline is British Bank Collapses on the Asian Wall Street Journal. Read it, realise that it's all me.
Leeson fled, but was finally extradited from Germany and put on trial, charged with forgery and fraud. He was sentenced to 6.5 years in jail.
When you look around, all the TVs above your boarding gates have got pictures of me on it.
I'd heard the name Rogue Trader, I'd heard of the movie, but I'd never gone into it. And I was on the Emirates plane, and on 1995's playlist, the summary had Nick Leeson goes on the run.
The total loss in sterling is £862 million, so it's $1 billion US.
At the height of that position, I think when we were on the way over here, we were talking in estimations, in contracts, was it 100,000 contracts in the option side?
You mentioned to me that somebody that you'd had on the programme before controlled 10% of the S&P. I was 50% of the Nikkei 225. I think the problem for the retail traders, or I think the thing that affects more retail traders than anybody, is just
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Let's take a break for a minute there, guys, because I want to let you know about one of our sponsors. Alpha Futures is offering the best one-step evaluations in the industry. They have the largest end-of-day based drawdowns in the entire industry, with up to 90% profit split and lightning fast payout speeds, and offering advanced and standard accounts to fit your needs. Alpha Futures is truly offering the most elite plans for the lowest total cost to entry in the industry. You can start as low as $79. And thanks to the podcast, using code RIZ, R-I-Z, you can get 20% off any of those challenges. Go to the link in the description below, and let's get back to the episode. Welcome everyone back to the Words of Rizdom podcast, still the number one trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. Talking of which, today we have an absolute legend of a trader with us today. He is world renowned as the Rogue Trader. The trader in the 90s who lost over £1 billion that led to the bankruptcy of one of the oldest banks in the UK, which is Barings Bank. He has a movie on him called The Rogue Trader, where the person who played him was Ewan McGregor, an absolutely phenomenal actor as well. But we are joined by the one and only Nick Leeson. Nick, it's a pleasure to have you with us today.
Pleasure to be here.
Thank you for travelling over. I know it wasn't easy, especially to small old Nottingham, not like a nice place to visit necessarily. But yeah, we actually got to spend a little bit of time together before the podcast, which I'm grateful for.
We did, and like I said, I have some ties to Nottingham. My dad was from Nottingham, so it's not that I spent a lot of time here when I was younger. So Nottingham doesn't share any of the blame, but No. There's a tie as well.
No, it's such a small world when you told me that. Yeah,
It is,
I was
yeah.
surprised. But Nick, the way I would love to do this is just go into sort of the journey. I'm sure,
Yeah.
obviously, you've told it many times, but as I was saying to you, like our audience probably hasn't, surprisingly, but I know they're going to absolutely be excited to hear this because they want to hear from the veteran, the professional traders who have experienced things that they are trying to aspire towards, and also hear things that they can hopefully learn from and do better in their trading journey, for example. But I said to you earlier, I nearly let slip like what my first question would be.
Sure.
And you said to wait, right?
Yeah.
And I'm thankful for that. But my first question, the start of the movie, The Rogue Trader,
Yeah.
this opening scene is essentially you in a bar and you get hit across the face with a chair.
Yeah.
And I want to ask, did that actually happen?
Yeah, genuinely, it did. I think it was it was a mash of or a mix up of a couple of different stories. I used to play a lot of semi-pro football in those days, so we'd always be out and around the sort of Watford, Hertfordshire area, having nights out and probably a few too many to drink, and so half of the story is from there. But that actual episode occurred at a place called Batchworth Hall, which is in St Albans. So it's just a night out with some friends. There was a bit of a disagreement with some guys in the bar. The disagreement wasn't mine, but I was there. And the bouncers rushed into the nightclub. They separated it in two. I got caught on one side with the aggrieved parties. Somebody hit me with a chair. I woke up in hospital 13, 14 hours later. Broke my jaw, broke my nose. I was working for Morgan Stanley at the time, so was doing quite well at Morgan Stanley, and had to go to work on the Monday. So I was wired up for 4 weeks at Morgan Stanley, trying to answer the phone and pretend that everything was okay. And obviously, I told them I was in a car crash because that's what it looked like. But no, the truth was I got hit by a chair in Batchworth Hall. Years later, I was at an event in Mayfair, and there were some people there that used to work for Barings, but more the Baring brothers side of it. And we had a break or we had an interval halfway through the show, and one of them came up to me, and he said something along the lines of, anybody who goes to Batchworth Hall shouldn't work for Barings, and it's just a bit weird, and people aren't defined by where they go or where they grow up or where they went to school, and there was still a bit of that. It was very very blue-blooded in that regard. Baring Brothers was not Baring Securities, not quite so much.
Yeah, that was one distinction that we made on the way over here, was that there was two separate arms. So there was Baring Brothers, which was the institution, the banking side, and then there was Baring Securities that was formed. Which was like the more proactive, getting out there and trying to make a name for itself within the pits and the trading side.
Yeah. Baring Brothers was the 233-year-old merchant bank that steeped in history, and Baring Securities was only formed in 1985. So at the time of the collapse, it would have only been 10 years old. But it was very much the money-making part of the business. It was very much about branching out into new economies, especially the tiger economies in Southeast Asia, getting there, grabbing a good part of market share really, really quickly, being aggressive in that way. Their research was always top notch. Everything from but infrastructure and structure, controls, processes, there never really were any. I mean, I moved to Jakarta to solve a problem that Barings had down there, and we operated out of the managing director's hotel room. Oh. There wasn't even an office, so it was that bad. It was, the focus was on grab the business, make the money, and then we'll sort out everything else afterwards. And that was always a business model that was going to be doomed along the line. And unfortunately, I was the instigator of that in Singapore, but there were probably there were at least 2 or 3 other episodes that could have gone a similar way, in and around that time. yeah, no, it wasn't a particularly well run or organised operation. Very renowned for its research, its analysis, its trading, but just not having any infrastructure really behind it.
Yeah, which is always so important, which I'm sure we'll get into very, very shortly. What I wanted to ask you to begin with, though, is like, what was it about the world of finance and trading that had your intrigue? Because I know that the trading side was what you wanted to get into, but you had to work your way into that sort of role. Yeah. So what was it about the trading that had you intrigued? Why did you want to be a trader in the first place?
I was gonna say I kind of dropped into it by luck, but people at Barings will say it wasn't very lucky. But I at the age of, I grew up in Watford. Went to a very good school. Was doing okay at school. Did very well at O levels, A levels. My maths teacher was sick for a year, and so it was quite easy to avoid those lessons for a year. I just didn't go. There was a substitute teacher who was not even bothering to keep a register, so it was, we could go and mess around in town or whatever we were doing, and then trying to catch up on maths A level when you've avoided a year is tough. So I failed my maths A level. I always joke that meant that banking was clearly the right career for me, but it was. I up until that time, I probably thought I was going to read law. I'd applied to York University. I'd been given an offer from York. It was I can't think what the offer is now. Maybe it was 2 Bs or 2 Cs or something. So it was quite a decent offer. And then somebody applied to Coutts and Company, which is the very high profile private bank. The royal family are all account holders in a branch in the Strand, and I just thought I'll apply. So I applied to Coutts. There were probably 20 or 30 people who applied from my school. I'd never heard of the bank before. 2 of us were given interviews, so I went up to the Strand for the interview. There were a couple of tests, one of which was maths. I think the other maths and English, maybe, those sort of things. And I was offered a job. The other person didn't get offered a job. And, I just decided that with the money that was being offered on this particular role that I was going to be taking, I could sit in university for 3 years and maybe earn the same money. So I started at Coutts. You could end up anywhere. They probably had 11 branches at the time, all of them in London. They do have offices in other parts of the country now, but there were 11 offices in the city, in London. So a lot of them were in the West End, Cavendish Square and places like that, and Chelsea, around those sort of areas. They have a couple of branches in the city, one of which was at 15 Lombard Street. So you pretty much walk out of Bank tube station and straight onto Lombard Street. So that was the heart of the city at the time. That was where everything was going on. The clearing house was on Lombard Street as well, so we used to take checks down there on a daily basis to have those settled, the big town checks that people were using at the time. There was none of this instant transfers of money from one place to another. If you'd see checks coming across from the big brokerages, the big law firms for several million, and those would just be tallied and reconciled and paid across between all of the big banks that were in the town clearing system. So I used to do a bit of that, but it was very much the heart of the city, and so you've got that buzz. And for somebody coming from Watford, I don't think I'd ever stepped foot in the city up until that point. I don't know why I would have needed to prior to that. So you kind of get caught up in that excitement. You're still performing a fairly menial role, but we used to have to wear tails and waistcoats, and you had to be clean shaven. You couldn't have so you wouldn't be able to work there. And there were various rules, but lots of celebrities who banked there. I think you had to have a net worth in excess of £1 million to have an account there. But it was good, and there was a good mix of people. A lot of people from working class, lower middle class backgrounds, fairly similar to myself. So it was an enjoyable social environment as well. We used to look after Morgan Stanley, was one of the big accounts that we used to look after. And then you've got the whole Big Bang era that came in 1987. So you've got the deregulation of the city, lots of new banks. So, banks that you'd never heard of up until that point come in and taking offices, Moscow Narodny and, various different, all the big American banks coming in. And they needed people. So, you used to get off the tube in London and you'd be handed like a little magazine which was just purely jobs, right? And it was you could get a job with an increase in salary of 2, 3, 4 grand, and this magazine was full every single day. Well, maybe it was a weekly magazine, but it was full all of the time because there was so much demand and there was not a great deal of supply. So it was perfect for me, because that meant opportunity, and you could go where you wanted. And my next step on that path, I suppose, was to Morgan Stanley. But banking wasn't something that I saw myself as destined to getting into. Neither trading. I think I was probably going to be a lawyer when I was 17, 18, and I've touched on that a little bit over the years as well, I suppose.
Yeah, no, for sure. And when you reflect on that, do you find it just crazy how life can, when opportunities come and you might have a certain thought at that, especially at that age, because that's what we find as well. When you go through that school and university route, they're telling you need to know who you need to be or what you want to become. Yeah, and then life can just take you a whole different path. I'd probably push against that. I think if you speak to any entrepreneur, you speak to any trader, and you speak to the people that have been most successful in life, I think it comes down to timing, right? So it's timing, it's that opportunity and whether you grasp it at that time. And I think you look at so many different success stories over the years. They're all very, very different, but it all comes down to timing. And trading is no different. If you can get your timing right within trading, you've got your analysis right, and that fits into the timing within that. You can be successful. There's no guarantee of success, but as there isn't in any walk of life. But timing, I think, is a key part. People like my youngest son is doing a degree at the moment, and he has a desire to get into the world of banking or trading at some sort of avenue. I think I'd like to think his opinion or his decision flow will change over the next few years, just because. You want to do. I've always been really fortunate. I know I haven't had the most checkered, I have had the most checkered business career, but I've always done something that I enjoyed, right? And as much as I've been through the mill in certain episodes and still deeply embarrassed by a lot of the stuff that happened during that period, I'm very fortunate to have enjoyed every day that I've worked. And there's lots of people out there, right, who have to do a job to put food on the table, and they hate the job that they're doing. And I accept and acknowledge that, and really am grateful that I never found myself in that position. And my dad the boy from Nottingham was a plasterer, and I would have hated doing that. And it's just, I didn't like getting dirty. And, I didn't, well, I suppose I did get dirty in the job, really dirty in the job that I did all those years later. But yeah. Well, it's crazy because it's like, as you say, getting dirty in terms of the manual labor side of things, but then equally the pressure and the stress that comes with trading floors and the pits, for example, it's like two hugely different things, I imagine.
Yeah. Yeah, it is, and my I think my dad, not to over characterize this, but I think he would have, he would have had fairly simple outlooks in terms of what could be achieved through life. And, I was very different in that regard. In terms of the pressures and everything else that came with the job, I'm a very type 1 alpha type personality. I don't, I make decisions quickly, I always have, and I've not been scared of making decisions. Now, I think that's rebounded on me massively on certain occasions over the years. But that's my personality type. And, the pressure, the risk and all those sort of things were things that I encouraged. I grabbed at those. That was the opportunity that I wanted. So I grabbed that with both hands. And, too much too soon. I was 25 years old when I moved to Singapore to run the operation there. And from a business perspective was still very immature. And I think that, that is shown throughout the story, and you can get too much too soon. And, there's plenty of episodes of that over the years.
Would you say that immaturity, though, is that more of a self-reflection and something that you knew at the time or maybe afterwards? Or was it something that even could have been picked up on? Or do you feel like you were showing a stronger sort of character to fit the role?
I think from my personal perspective, it's on reflection. So I've done a lot of thinking about things that went on during that time. Some of it in prison in Singapore, some of it afterwards. And it's important to try and understand why you made certain decisions that you did, and to take those apart and pull back the veneer of what happened and your decision making process. And it's only through that way you can avoid those mistakes going forward. And again, I think there's a trade analogy there. We all make mistakes when we're trading, and understanding why you made those mistakes and trying to change those going forward is important. So keeping records and stuff like that and analysing your trades and reviewing them, I think, are important messages. But yeah, for me, it was, I accept the immature argument, and it's more from a business perspective in terms of, making the right decisions. And there were so many simple things that you could have done. And, asking for help and advice was the most simple thing that you could do. And I was surrounded by people that could have helped me. And they could have pointed me in the right direction and said, don't do that. You're taking on too much risk. Refer the matter here, or I'll help you through the process. But I was 25 years old. It was a very different environment to the one that we all live in now, from a business and from any perspective. To be honest with you, it's not quite as PC as it is now. We were, it was very ego driven. It was very it was very profit driven. Greed is good, or whatever analogy you want to put to it. So, weakness wasn't something that people showed. And, especially not in a trading environment and not in a live trading environment. I know you've had Jason on the show, and you might have had some other, some pit traders as well, but it's a very macho, egotistical environment. There's, punches are thrown from time to time, fines are paid. Sometimes fines are prepaid because you're going to punch the person. So you can, there's a bit that you can get away with. So weakness weakness in financial markets isn't really something that you see a great deal of. You don't, as much as sometimes you feel like you want to cry about your last trade, you don't do it, and certainly not in a live environment. It's all macho, it's bravado. You're going down the pub after you've been to the trading pit during the day, and you've just been absolutely wiped out. But you're in the pub, you're buying drinks, and you're putting on the image that everything's okay. It was a good day today, whereas that it was an awful day, and you've got that whole Jekyll and Hyde type of mentality, which can become very difficult to maintain.
Being 25 though, and going out to Singapore and running essentially the floor for Barings, is that usual age wise? Like, is that quite a young sort of age to be running a floor and to have that responsibility?
I think you can always see episodes of people, at that age taking on lots of responsibility. I think the problem in Barings at the time is that there was no mentor. There was nobody to help me through the process. I went out there originally in a business development role to appraise whether or not we wanted to upgrade our seat on the trading floor. So I went out there originally with a guy called Tony Dickel, who was based out of Hong Kong. But we were, there was 3 of us in this business management role, looking at new opportunities for Barings at that time. And, there was nobody else. You look at the guy who was the head of the operations in Singapore. He knew about how to settle equities, but he didn't know anything about futures and options. And then you've got the managing director of Barings in Singapore, plain vanilla equity guy as well, no experience or no knowledge of futures and options. So there was nobody to assist you through the process. We had a trading desk that was based in Tokyo and Osaka. There were 1 or 2 guys who were trading in Hong Kong, but it was all very much at arm's length. There was no, my reporting lines were really blurred. I pretty much reported to everybody. When things were going well, they all wanted a piece of it. But that didn't work in the end either. But yeah, there was nobody really to refer things to. I mean, even the first day there was a loss. What do? I went and told Simon Jones, who was the head of operations, and he says to refer it to London, right? So okay, London aren't in the office for another 5 or 6 hours. So what am I going to do for the 5 or 6 hours in between? So I tried to trade my way out of it. I'm looking for the market to get back to the level that the loss was originally incurred at. That doesn't happen in that 5 or 6 hour period. And now I haven't done, the number one rule. If you've got a loss or you've got an error, you cut it immediately. I've now held it for 6 hours. So I'm more complicit in the error, and, I don't want to highlight my failure. This is my big opportunity. As much as it was a big opportunity, I'm even bigging that up even more. In my head, this is me taking on the world type of thing. I've been given the key to the door, and that adds to that importance I'm building around it, and that fear of failure that's just growing and growing and growing, and eventually gets to a level where it stops me doing what you would normally do.
And that's normally the story of, obviously on a massive scale with yourself, but just everyday retail traders, for example, go through a very similar thought process just in their smaller size trades, handling losses and trying not to go on till, trying to recover losses to even just get to break even. It's a very common theme. We see it so often, within the trading realm. But you mentioned actually not having a mentor.
Yeah.
As part of your role and going into running that floor, which I found interesting. And as you mentioned, like most of the people who were in certain roles that you would be connected with were in different sides of the industry or in the markets, like in equities. So did you have much experience with futures and options before going into the role?
From a settlement, from a clearing perspective, yeah. From a trading, very limited. So it was, like I said, this was my big opportunity. And when I was at Morgan Stanley, I was destined to go and work on the London traded options market. But they weren't able to let me go at that particular time to work with the person that wanted me to work with them. So I resigned, and that's how I ended up at Barings in the first place. And then they were going to send me to Australia to work on the Sydney Futures Exchange, and so they were doing everything that they could to push me in the direction that I wanted to go, which was great. They then had this issue out in Hong Kong and Indonesia that they needed resolving. There was a couple of £100 million worth of unpaid for equities that they'd traded. So that's what we went down there and did. And as I said, I was back in that business management role. And then one of the roles or one of the jobs that we were looking at was the upgrading of the Singapore International Monetary Exchange license, and I just put my hand up and I said, that's what I want to do. You know, and everybody, because I was very much in credit in terms of what I'd achieved and done for Barings at that time, everybody was happy to support that. But yeah, you know, immediately in charge of the back office, the front office. The front office is very much supposed to be order driven, so it just order filling, and then it changes over time as things do. You've got circuit breakers kicking in Japan, so now all of a sudden Singapore's the lead market, because the circuit breakers mean that the market's closed, and it stayed closed for the day. So you've got an exchange that was trading 2,000 contracts a day, and overnight is trading 20,000 contracts. So the systems can't cope with it, the people can't cope with it. We're all looking for people to recruit. There's nobody left to recruit, so you start taking people from the exchange, which means that there's this knowledge or business deficit, because they don't know what they're doing. So you've got people who are trying to control, like me and other people who are trading on the trading floor, who are pretty much their first day in the job. You know, so we'd bully them. You know, we'd tell them what to do, or they might come, you know, like in life at the time, you know, you'd get a fine if you were having an argument with somebody and it looked like it was going to, you'd be fined. You know, be so many different things you could be fined for. In Singapore, you wouldn't get fined for anything, because, you know, you'd just bully them out of it anyway. You'd do what you want. We'd cross trades outside of the pit. I'd change the price afterwards. It was just ridiculous what you were doing in Singapore. If you compared the London International Financial Futures Exchange to CIMEX, it was, it was chalk and cheese. You know, you've got one operation or one exchange that's very well founded, very well organised and controlled, and you've got the other one which is pretty much the Wild West. And that's what the Singapore International Monetary Exchange was at that time. And you know, it's you look at Barings, and there were so many things, or so many weaknesses within the system, all occurring at exactly the same time. You know, you've got Barings, a really poorly run organisation that doesn't have infrastructure, processes and controls in place to safeguard it. You've got an exchange that doesn't know what it's doing, really, because the people there, we've taken all of the people off of the trading floor, so there's nobody left, right? You've got a couple of people who sit in offices up in compliance, and the president of the exchange, but they were so desperate to have a successful exchange and a successful product that the Ang Swee Tien, the president, would call me to come to his office and say, can you do more business? You know, can I give you this customer? Right, so this is the president of the exchange saying to me, I'll give you the biggest customer on the floor so that we can execute more with him. Because, you know, when you're looking at if you want to trade somewhere, there's two things that you look at. You look at the open interest and you look at the volume, right? If there's no open interest and there's no volume, don't go there. You know, that's all these small cap stocks that you see being traded around the world. If there's no volume and there's no if there's no open interest and there's no volume, leave it alone, because you might get in, but you're never going to get out. Yeah. And it's exactly the same with any exchange. And CIMEX was one of those. They only had one good product, that was the euro dollar. It had volume, it had liquidity, and it had open interest. Nikkei 225, nothing. You know, JGB, nothing. I can't even remember. Euro yen, nothing. You know, so they were desperate for something, and you know, they I'm not going to say that they let things go, but you know, they saw the benefit of the increase in volume and pandered to it a little bit, is probably the way to explain it.
What was it like for you the first day going onto the floor? You know, you finally get into this role that you've been working towards and wanting to fulfill. And as we know, the pits, the energy on the, well, as I say, as I've heard of, the pits, the energy on the pits are just like no other. So what was it like finally achieving this sort of goal and this sort of role you've been working towards? You step up on that floor. What were your thought processes?
Let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity, from an in-house broker so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand. On top of which, they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZeller. TradeZeller is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a forex trader. Whatever trader you are, all you do is connect your trading platform directly with TradeZeller. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZeller does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZeller, so use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
I don't know if I can visualize or try to rationalize what they were now. I mean, you know, I would have been very business focused. It was everything for me was always about being successful, doing everything as well as you could, as efficiently as you could, as accurately as you could. So I would have been very business and the process focused in that regard. Yes, it was great to be there. I think, and maybe this is a question you can ask Jason or one of the other guys at a different time. I think it would have been, I think when you're, and I don't know if the comment that I'm going to make is going to come across as I want it to, but when you're an expat in a largely Asian trading floor, I think it's a bit different than if you're a UK national walking onto life. Mm-hmm. I think that for some reason that there's a different process in that. So I was kind of a boss as opposed to, a runner starting out on life. So, for me, yes, it was achieving everything that I'd wanted to. And nobody wanted to be more successful than me. I just didn't know how big my fear of failure was at that time. And that manifested itself over the next 2.5-3 year period, to the extent that, as much as I might have been able to sit with you and have a conversation about trading or whatever else, and you might have been one of my bosses or doing my review at the end of the year, and is there anything that we need to know or we can help you with or whatever, and making sure that I was okay, I still wouldn't have been able to bring myself to tell you that I was failing or that something was going wrong. I couldn't tell my wife, I couldn't tell friends at home. So how was I going to tell you? And, you get carried along on this journey of success that, you kind of, from time to time, and it's not that often, but from time to time, you definitely say, you want to say, stop, I want to get off. But it's all going on around you, right? So you've got, all of a sudden you get into 93 and Cymex are having an award ceremony and you're up for an award. Right, so that's not something that you're engendering or trying to facilitate within this process. And then, bonuses are paid at Barings and they have big parties to celebrate the success that you're having. They have a conference which is just about, the success we're having in Singapore and how we can do this in other locations. And you get carried along by it because you know the reality, right, which is the hardest part. This is where the real Jekyll and Hyde stuff comes into it, because I was the only person who knew the reality of what was going on there, what the numbers were, and everybody else was thinking about how fat their bonuses were going to be, and how we could go and do this in Brazil. And, they were divorced from the reality of the trading floor. And, by my deceit, by the fact that they weren't digging deep enough, but they were completely divorced from it.
In terms of that, though, so as you said, through your deceit, for example, but how hard did you try really hard to hide it, or was it just sat into an account which, if they really had tried to look around in, obviously the infamous, it was 888, was it 5/8, was it? Yeah, the 8888 account, I won't say that right, but was it something that they could have, if they had really looked to try and get some clarity or looked into the accounts, etc., would they have just been able to come across it?
100%. They, it's described as a hidden account, right? There was nothing hidden about it. It was pretty much on every piece of paper that you could pick up in the office. We had a balance sheet. So Barings Futures Singapore was separate from Barings Securities Singapore. So there was a balance sheet every month that would be given to the accountant, and then she would incorporate it in the month-end reporting. But the only day we gave her that report was the last day of the month. So if she had ever come down and as you're taught in audit, done some quality testing, if she'd picked up the balance sheet for the 15th of the month, she would have found out, or she would have seen that there was a massive hole in the balance sheet, which was the 5/8 account. If you'd interrogated the balance sheet and understood why such a big amount of margin was being paid to the exchange, it would have led to further questions that would have highlighted what was going on at the time. You've gone, like the audit report at the end of 1992, which was done by Deloitte. They came in. They actually did do some quality testing, and they, it was very, it seems very strange when you think of it these days. But we used to have to write trade tickets on the floor, so you'd write those out, and then they'd go out to be matched. You'd put an account number on it, and you also used to have to timestamp it. So you had a little timestamp in front of you on the trading floor, and you'd timestamp it, and that was not quite a legal requirement, but it was an exchange requirement, just in case there's a dispute and you've got a time on the ticket. So when Deloitte came into the offices and they were going through the tickets, they found a load of them, like a lot of them, that didn't have a timestamp on, because we were writing them out so quickly because the markets were closed in Osaka effectively because of the circuit breakers. So part of the audit report for 1992 was the fact that there were so many tickets that didn't have a timestamp. And all of those tickets were for the 5/8 account. So as an auditor, you've got to go that step further and understand, well, what is this account? And how does that fit into the balance sheet? And how does that fit into the business that I'm auditing at this moment? So all those sort of things weren't done. If like I suppose if I think back to that time and all the different things that weren't, the simple processes that weren't done, it numbers hundreds, if not thousands, really. And it's just, I think it was very unique in that there were so many things, so many of these things occurring at exactly the same time.
So it's like the collective failings and lack of procedures and infrastructure around the whole process from top to bottom is what then ultimately led to this event. And
people. The people weren't good enough either. They weren't asking the right questions. They weren't challenging me. So there were so many things.
Was there anything about your character at the time that sort of demanded this respect? Because in the movie, for example, it really painted towards like a lot of the Barings higher ups just really put you onto a pedestal as this incredibly insane trader that they didn't want to sort of nuisance with questions or anything because you were giving such great returns. So they kind of put you on this pedestal and really respected you to a level where they didn't want to ask you questions.
Yeah. I think profit does that. If you're reporting profit and they're big profits, people don't want to rock the boat. People don't want to rock the boat in the banking system anyway. You get a lot of people that kind of are getting six-figure salaries, so they're doing quite well, but they have no further prospects within the organisation. So it's not that they're stuck, but they're opportunities to move higher within the organisation and earn more are quite limited. So once you get yourself into that sort of role, you're not going to rock the boat, because, you know, if you stand above the parapet and you say, you know, I think something's wrong over there, and you're wrong, you might lose your job, and you're not going to risk that. So you get an awful lot of that happening in the world of banking, and it's in that middle management area. And that benefited me. You know, with hindsight, you can see, you know, a lot of the personalities that were involved at the time weren't particularly well liked. Simon Jones is the key one within those. He was quite bombastic, quite nasty to the locals that worked for him, the Chinese, the Malay and the Indian people that worked for him in the operations department. Would they have referred anything to Simon? Not a chance, because he was nasty, and he would have ridiculed them in front of everybody else. So they just weren't going to do that. You know, they were going to continue with their jobs and not really raise any issues. You know, we had in Singapore, Rizal, the girl who ran the back office, very inexperienced, no previous experience of futures and options. So she was very much moulded by what I needed her to do. So if there's, you know, the movie suggests that there's a bit of she's working with me on different occasions. That's not the case. She was just moulded by what I needed her to do. So, if she's guilty of anything, it's a bit of naivety. But she was fresh out of the National University of Singapore, no experience, and, she was not supported by the people around her either. And like I said, very much moulded by what I needed her to do.
And it usually wouldn't be the case, right, where you would be running the front office, so like the trading side, and then the back office as well?
No. There's a clear segregation of duties that should occur there. Barings at the time, though, we're going back to the 90s, and Barings was very much an organisation where, there was always a lot of money invested in the front end of the business, the research, the analysis, the trading side of it, and the operational sort of settlements areas were definitely left behind. They didn't have the same sort of investment. So just to give you an example, right, if you walked into Citibank in the City of London now and you wanted to go to the compliance department, there would be 2,500 to 3,000 people working in Citibank's compliance department in Canary Wharf, right? It's just a huge area these days. At Barings back in 1995, we had one compliance officer for 2,500 people, and she was also the risk manager.
So 2 roles again.
2 roles. So it's, it was all about cutting corners and keeping costs down, unnecessary costs down. And, you turn the world of banking around over the last 25 years, that's changed. Like risk managers are involved in trading decisions, in business decisions. I'm not thanked for that, but it's a more thorough process in terms of how things are done and the importance of those areas.
That's usually how it goes, though, right? That someone has to, not some in particular person, but like a series of events has to occur where a big mistake happens. But then that mistake leads to the progress and lessons for everyone else to refer to make sure it doesn't happen again on that same scale or through that same process.
Yeah. Even trading, if you go back to, if you go back to life and the pit trading, there were anomalies within it. If you knew somebody and he was an order filler for one of the big banks, he could potentially, and he did usually, would look after some people that he knew quite well. So you'd almost you'd be tipped the wink to get out of the way. So that trading journey has gone from open outcry, which was a specific form of trading, to be traded on screens. There's more transparency. It becomes a fairer marketplace. There's all of those anomalies are ironed out, and it's exactly the same as you're saying with the world of banking in general, or the world of finance in general, because Barings brought with it a lot of rule changes and a lot of requirements, and then you've got 2007, 2008, you've got Lehman Brothers, which brings another whole world of those, and it keeps changing. And now, if there are irregularities or if there are problems in the system, it tends to be in fairly niche areas. So family firms like Archegos in the US, the crypto area is still a bit of a minefield. I think, and you've got the collapse of FTX and Sam Bankman-Fried over the last couple of years. So you're exactly right. It takes a disaster to create improvement, and that's kind of I think that started back with Barings in 1995.
Don't you think, in terms of that exact thing that we're talking on there, don't you think it's interesting? Because I always find in the retail space in particular, everyone's always like, oh, we need to learn the banking strategies. We need to know what the institutions are doing, the market makers and so on.
Yeah.
And I always I used to refer to like the 2000, the Big Short, Margin Call, these movies. But equally, this Barings being, earlier on, if anything, one of the oldest banks, or the oldest bank in the UK at the time, very prestigious, very well respected, and yet so many failings on such a scale that you wouldn't expect. And I always try and say to people, like, why do you put these banks and these institutions on a pedestal as a retail trader, when in reality, when you look at these big moments in history, they were making mistakes. Not everyone in that position knew what they were doing either. And therefore, it's always good to just focus on you as the trader versus, what's this? Whether it's an influencer or whether it's institutions or banks, is much better just to focus on your individual trading versus putting anyone on a pedestal, because you don't actually know what's going on.
Absolutely. I mean, you need to have the courage of your own conviction. If you've got a niche or you see something that's irregular or wrong with the market, then pursue that. There's so many episodes, if you look back over the course of history, where the guys who and I'm going to get his name wrong, but there were guys who were involved in the Black and Scholes margining method for futures and the risk management process of that. But they were also one of those guys, and I can't remember which one it was also on the board of long-term credit management when that company went bust. So these are the guys who are, the founding fathers of a lot of what goes on within that derivative business. JP Morgan's Alpha Fund, right? That was lost a fortune 1 year because they hadn't introduced enough standard deviations when they were looking at the risks and what the parameters of what could happen to the fund. And lo and behold, it did happen, and it wiped out an awful lot of money. Barings, like years after the collapse of Barings, they were doing some analysis into the software that was margining and assessing the risk on the options book. They found out it didn't work, But so somebody had been, performing this analysis on a daily or this risk profiling on a daily basis with a system that didn't work. And there's lots of that. And yes, I think. The man in the street does put their bank on a pedestal. I think over the years that's changed, and rightly so. Because I think, if I go back 30 years, the world of banking had a certain amount of mystique and mystery around it, as does the world of medicine. We kind of accept what we're being told by doctors and the like. And it's because you think you're not going to understand it. But it doesn't take a lot to understand it. You just need to, do a little bit of work. And as I said at the beginning, like if you do think there's something wrong, have the courage of your conviction and go after it.
Did you mentioned a couple of times about, one of the mistakes being not asking for help.
Yeah.
And you did mention that there were people you could have asked. But do you feel like those people you could have asked would have made any difference? Were they people just on the floor? So like rather than people within Barings, more so just on the floor who, were other traders who could have given some, just some advice or?
I think both really. I think the problem was for me at the time, I was 25 years old, and I, in the context of everything else that was going on around the markets at that time, I saw asking for help as a sign of weakness, whereas I should have seen it as a sign of trying to do things correctly. And like if I'm out and I'm doing after dinners or talking at conferences, it's that's the most simple piece of advice that I can give to anybody. It doesn't matter what age you are, or what what point you are in your business career, you know, you are surrounded by people that can help. So ask, you know, and you know, you're all working for the same firm, right? So I had a very, you know, I wasn't thinking about you know, shareholder value, how my actions were going to impact on other people. And those messages need to be brought home. You know, my actions impacted on a lot of people at that time. But I wasn't thinking that way. It was about me. It was about, you know, I can't fail. I've got to bring this back to where, at least to a break-even point.
Because that was your whole goal. It wasn't a case
100%.
of just trying to hold it. Your whole goal was to essentially get it back. And
I did on one occasion in May 1993. You know, the loss has been down at $20 million. I get it all back. I've got the opposite problem. I've got $250,000 I need to get rid of, profit, which is easy to do. I just stick it on somebody's trading book in Tokyo. They're not going to argue. And then I go home.
why did you have to get rid of the profit?
I can't make a loss. I can't make a profit either. So, you know, it wasn't going through my book at the time. It was going through the guys in Tokyo's. And so, you know, I went home that weekend. It was a Friday. You know, I think it was the first Friday of May, 1993. The options expired. You know, pretty much on the point that I needed, and that was it. You know, I wasn't going to have the same problems again. But you know, what's happened in the preceding period is nobody's been reprimanded. Nobody's being told off if they make a mistake. At the order fillers. So if they make a mistake, everything's getting hoovered up in the 5/8 account, getting hidden away. And so we go back in on the Monday morning. They get an order to sell 200 lots at market. They sell 210. The 10 lot goes into the 5/8 account again, and the whole story starts again. So, you know, that's where my immaturity came into it, or, you know, my weakness, if you like, because, you know, at that point I should have realised that this wasn't something I wanted to be getting back into again, and you know, it should have all changed at that point. I've been given this, you know, this eureka moment and can start my life again. But you know, I'm going to have to be tougher. But I wasn't, and you know, I think, you know, I was talking to somebody the other day about a piece of work that I've got coming up, and they said, "Well, if you don't like what we're doing, you can sack us." I never sacked anybody in my life. You know, I didn't have that tough bone in me. You know, it was always, you know, I'd always try and help everybody along and keep them in the process. So, you know, that 10 lot went back into the 5/8 account. By the end of the day, that 10 lot is probably, you know, 200 lots because they're still making errors. And, yeah. And I've also now got this belief, I think, you know, so I've got this huge fear of failure, but now I've kind of had it rubber stamped that I can get away with it. Not get away with it, but I can get it back. Yeah. You know, which is dangerous as well. You know, and again, you know, you were talking about, from a trading perspective, you were talking about sometimes when a trade's against you, or you've increased a position when you shouldn't have done it, trades back up to that level. What do? You know, get out, and even if it gets close, you know, take a tiny loss on the trade, and you know, reanalyze about why you got into it. But you know, human nature is that we're all still trying to look for that bit of profit out of that trade, and you know, more often than not, it turns around and punishes you. So yeah, there's so many different processes within that as well.
So the first time when you're holding those losses, what was the feeling like? What was the day-to-day like for you going into the floor, still having to try and trade, still trying to find a way out before that first time where you did get it back to break?
I'm literally scared to death. You know, like I'm expecting a knock on the door every minute of every single day, especially in the beginning. Every time the phone rings, I'm like, no, who's that going to be? You know, what are they going to ask? You know, what's my response? But you don't know what the question's going to be, so you don't know what your response is. So it's all thinking on your feet. So it's a horrific environment to be in. But it's more horrific for me to fail. So you know, you keep going along. You don't get the knock on the door. You know, there's not that many phone calls, or they're not asking the right questions. So you survive for another day. You know, you get in the next morning and it's exactly the same thing. Every time there's a knock on the door, every time there's a phone call, you think it's somebody who's going to expose what you're doing, because it's a real simple check. You know, you add two accounts together, you compare it to the Singapore International Monetary Exchange. There's a position discrepancy. That position discrepancy is the 5/8 account, right? A 5-year-old could do it, genuinely. And it's something that needs to be done every single day before the market opens. But nobody does it for 3 years. I used to do it every day at Morgan Stanley.
Before that point?
Yeah, prior to it. Yeah, I used to do it and make sure that the trade, the positions agreed. If somebody's position didn't agree, they didn't trade that day. So nobody's doing that, and it's the most simple check. And then, you know, all of a sudden you've got a week. You've passed a week. Nobody's knocked on the door. Nobody's really asked you any questions about what's going on. So you've got another week that you can start on. So you get through that week, and then you can. So rather than thinking in days, you start to think in terms of weeks. And then you've got these key events that are going to occur. You've got an audit coming up. So Deloitte's are coming in. They're going to ask a few questions. They're a professional outfit, so they're going to challenge you a little bit more than the people in Barings, and that becomes a hurdle that you think you're never going to be able to overcome. And so you probably accelerate the trade in and trying to get out of the losses before Deloitte's arrive. But then you're thinking in terms of months. I've got a couple of months to sort this situation out, and it's just sort of extending that out. But in the beginning, you're just frightened to death. You know, any time there's a noise in the office, you think that's it.
And then even with the Deloitte's one though, like overcoming that, at that point you must think, well, no one's ever going to get this.
You become more confident. I don't think you ever think, or I don't think I ever thought that it was going to go on forever. I have spoken to people in the past who've been in other episodes within financial institutions where they've got to that stage. So there's a guy called Tom Harding who became an FBI informant eventually, but he was involved in some insider trading amongst the hedge funds in the US. So Tom will tell you that he got to a point where he thought they're never going to find this, just because they were doing it so often and nobody was asking the right questions. I don't think I ever got there. Obviously, the loss is increasing. The amount of money I need from London is increasing all of the time, and you know, you get a few questions that are a little better than some of the ones at the beginning, and you do start to worry that somebody is going to start to expose it, but. You know, always at the back of my mind there, you feast on the small positives. If the market goes in your favour, you know, if something is looking a little bit more encouraging, and it was all, for me, you know, as much as I was avoiding the realisation of the losses, I was avoiding the realisation of my own failure, which was something I couldn't do.
What was the first sort of trigger point for the first losses going into the 5/8 account? Do you remember at all, like where the first sort of the starting point was?
Well, like as I've described it already, we were, there was a huge increase in volume in Singapore.
Yes.
So there was, and we didn't have enough people. So we were still trying to recruit people, and we had a young girl who had just taken from one of the biggest order fillers, and she'd only worked for us for 2 or 3 days. So the orders would come down a squawk. The majority of orders from the prop desk would come through a squawk box on the trading floor, and then the salespeople who were selling to clients, they would phone. So they would often have phones open all the time to send the orders through. So because there was so much business, the circuit breakers were kicking in Japan. An order came in. The girl picked up the phone. Because everybody else was on the phone, she passed the order the wrong way. So if you're buying, your palm is facing you. If you're selling, the palm is away from you. So she got that the wrong way around. Wasn't what she was supposed to be doing. She was running the tickets from one place to the other, and then then you're supposed to match trades within half an hour period. But because there was this massive increase, the settlement system or the matching system kept breaking down. So it was taking 12, 13 hours to match trades. So it wasn't until 3 or 4 in the morning that we realised that we had a discrepancy. Had to make the customer good. because the customer had been confirmed on the trade, and then the out trade, which we spoke about a bit earlier, in making that client good, you've got double the amount of trade the other way. So and that's when I went and had the conversation with Simon Jones the next morning, explained to him that we had an error, that we needed to correct it, and he said report it to Andrew Bayliss.
And then from there, the creation of the account,
and
then pushed on. And so from there though, like, you went through this deep hole and you managed to pull it back. Do you feel like the fact that it came back, when it then started the second time, did you have a thought process of like, okay, we can pull this back? We pulled it back once, we could pull it back again.
100%, yeah. I mean, whether it was
not that it made it any easier for you.
No,
but it was just like having a belief that, okay, yeah, this is going to suck, but we can get it back. We've done it once.
Yeah, no, you definitely have a degree of confidence in that regard. It'd been up to $20 million as well. So it was a big sum of money until that point. But you get it back because you've got that most perfect expiry. You're still selling options. You're still keeping the account balance down to zero. And, you believe that, I mean, it might have been subliminal rather than, being omnipresent throughout that period. But, yeah, there was something at the back of your mind that said you'll be able to get out of it again.
And how easy or hard was it for you to keep track of all the sort of numbers? So like the amount of losses amounting up, the trades that you were doing, because this is all, as you've already been alluding to, it's all written, it's all paper. There's very little digital, sort of tracking going on.
Yeah, there's in the beginning, there's a fair bit, right? You get in the morning, you'll get a statement of the 5/8 account. You can see the trades, you can see the open positions, and you can see the margin applied to it. As I've explained already, a lot of what was going on was just pure avoidance, and I don't want to see the statement because the statement's reminding me, right? Mm-hmm. It's this is the proof every morning of how bad this is getting. So, in the beginning, the statement might have been 2 pages thick. Fast forward 6 months or 9 months, and it's maybe you've got like 2 centimeters worth of a statement being put on your desk. So I just said to the girls, just put it in the drawer. I'll have a look at it later. Not that I was going to ever have a look at it, but you can't divorce yourself completely from how much the loss is just because you're getting funding from London to fund the illegal positions, and the loss and the funding are similar, right? They're not exact, but say I had 500 million from London for extra funding, the loss is somewhere in the 500 to 550 bracket. So you can't get away from it completely. So I always knew the amount of funding that we had from London. The more difficult it became for London to fund, the more aware I became of the number because I was getting more calls about how they could get some of the money back.
When things did start to really get towards the end, it was actually a catalyst, like a natural disaster, earthquake in Kobe in Japan, if I'm not mistaken. Tilted things off the edge. Yeah,
there was an earthquake in Kobe. What happened with the earthquake in Kobe is like the markets have been falling. So I was long the market, and the markets have been falling for some time. If you go back to so just to get to more of a trading analogy, I suppose, and having to deal with stuff quickly, which I think is important in the financial markets as well. I was selling options to bring my account balance down to zero. So I swap in a P&L item for a balance sheet item. And as long as nobody interrogated the balance sheet, I was going to be able to do that forever, right? Until the bank ran out of money, because then they don't have the money to give me to fund those positions, which means that I can't sell more options. The problem was that as the market was moving lower, so, in 1992, the Nikkei 225 was probably trading around 38,000. By the time I left Singapore, it was trading around 16 or 17,000. And then, as we all know, over the last few years, it's been down to about 9 before boosting all the way back up to around 38, 39, where it is now. But because I was selling so many options, to bring the account balance down to zero. As the market's falling down, those options are becoming deeper and deeper and deeper in the money. So you've got an option that I might have sold with a strike of 30,000. Market's now trading at 24. So it's massive, it's massively in the money. And the amount of benefit I've had off of the call option that's been sold is tiny. So the leverage, the size of the position, it's all increasing dynamically as the market's going lower. Then, as you said, you get the earthquake in Kobe, and there were knockout puts at certain different levels. So if you went through 20,000, there were some knockout puts. That would immediately send the market down another 300 points. You go through 19,000, another knockout put comes into it, another 300 points. So it was all accelerating at that time as well. You've then got the added difficulty of Londoners saying they've got no more money. They can't pay you any more money. And that's the one part of it you need to keep this lie going. I was trying to think of a different word other than lie, but I came up with lie.
But it's like, at the end of the day, in that position, you were trying to wait for a moment for it to pull back, for the market to turn so that you could essentially balance out that checkbook, balance out that account.
Yeah,
it happened once.
Yeah.
And then mindset was, okay, we can do this again. But then not the market, the environment, and at the end of the day, as we know, through probably that experience and many others since then, it just never works out in the end. It might happen once, it might happen twice.
Yeah, markets are super efficient, and I was very short volatility. I started selling volatility on the option side at 55%. By December 1994, it's down to 7. So the market makers are getting hammered. And they start to group together. They have coffee meetings in Tokyo, and they're, how can we pick volatility up? And if I tried to unwind a position, the price was skewed against me. It was wasn't a particularly big market. So again, you go back to that liquidity issue. If I stepped into the options pit, say in November or December 1994, and I said, can I have a price in the 190 put? Fair value would probably be 15, and they would make the market 15 bid at 20, because they knew I was a buyer, because I was short so many of them. And then I'd say, okay, I'll buy at 20. How many have you got? And it'd be 20. But I'm short 20,000. Right, so you're just skewing the price all of the time, and I'm being forced back out. Whichever way, and then it dawns on you that you're looking for that eureka moment again. But now the position is 10 times bigger than it was when you had that original eureka moment. So if you actually stood back from it and you looked at your position and you tried to assess it and scrutinize it from a logical perspective, you would have just thought, there's no point continuing. There's just not a chance.
Because we estimate,
but you were so blinkered in terms of what you were thinking. And traders get that way, like as your market's going against you, and you're adding another position. It's now it's only got to go half the way back, and that sort of stuff. For my own particular trading style, I'm quite contrarian in what I do, and I'm always looking to buy on a dip and sell on a rally, which is dangerous, right? And I know it's dangerous, but I'll continue doing it. But you've got to be very structured and disciplined in terms of how many times that you do that. And with markets as they are at the moment, trading at record highs in the markets that I follow, gold and the Dow, the DAX is getting there. That's exceptionally dangerous. So, and I'm sure like Jason and the other guys that you had in from a pit trading perspective will tell you some of the games that go on, and you can see them going on now. We'd always try to trigger stops. If a market was trading near the high of the day, you'd always be thinking, is there a stop just above that? And you'd buy one more just to trigger the price. And that used to go on. I mean, and you can still see that on the screens from time to time. And you see those short, sharp bursts of movement.
And One thing I was going to say, at the height of that position, I think when we were on the way over here, we were talking in estimations, in contracts, was it 100,000 contracts in the option side?
Yeah, I think it was 100,000 options I was short, and I was long 60,000 futures or something ridiculous. Like it was, I think you mentioned to me that somebody that you'd had on the program before controlled 10% of the S&P. I was 50% of the Nikkei 225. Right, I was one half of every single trade that went through that market in Singapore at that time. Not the Japanese, the Osaka exchange, but the Singaporean International Monetary Exchange. I was 50% of the daily volume. I was probably getting close to 50% of the open interest. That's how bizarre and out of control this was at that time. And again, if you'd ever sat back and assessed that and thought, there's no liquidity other than me.
Well, it's like they say, hindsight is 2020.
Yeah.
It's so clear.
Yeah.
But I think one really important thing you highlighted very early on into the conversation was the fact that the way the pits operate is a very macho, alpha type. It's a kill or be killed. Like, you have to be strong to survive in there, and therefore you have to emulate that. Because regardless, let's say if you let the losses get to you on the first run, you would have just taken the loss and that's it, and then been out of the door. Same on the second run, it would have just literally been a case where you wouldn't have even been in that position in the first place if you couldn't be strong and push yourself. And the environment sort of accelerates that and sort of promotes that, as well as then alongside that, you're getting these accolades, you're getting these awards, you're getting all this praise for what you're doing.
Look,
even if they don't know what you're doing, you're still getting the praise for it. So then in that position, I can only imagine it's so easy to think, okay, I'm doing the right things. I can get out of this. I can keep going. Yeah. And no one knows, obviously, the fear of failure in there.
Yeah, you just need to have that holistic oversight of step back from it, right? And I think you need to do that a lot with trading, right? Just step back and look at what you're doing and really try to... it's that emotional detachment, right? We're human beings, so we're all far too emotional about things that are going on. And I've seen some of the stuff that some of the guys, Jason in particular, has been putting up about that emotional detachment, and it's brilliant, right? Those sort of real life experiences of how you can detach yourself from your trading are fantastic, because you see it, especially within the retail space. People get far too emotionally involved, and I think the easiest way to assess that is how often you look at your phone during the day, or how often you look at the markets during the day, and you'll find out it's far too many times. But those sort of things are very very, very important for me. It was just, position was too big. If I'd ever really tried to assess whether I was going to be able to get out of it, probably in that second or third year, the answer would have been no. But still, I'm going to have to highlight my failure to do that, to get out of it, because you're being propelled along by everything else. Like, if you walked onto the Singapore International Monetary Exchange into the Nikkei 225 pit, everybody would tell you that they didn't want to trade with me because they think that they lost money every time they trade with me. And they probably did, because I had access to Osaka and I was trading in Singapore. So, in Singapore, I'd be say I was buying at 50, they'd see the price tick down to 40 in Osaka. So they'd all sell my 50, but I'd then go and buy at 50 in Osaka. So they didn't have an out, because the price didn't go below 50 in Singapore. It went to 50. I put an order in to buy 500 at market in Osaka, and the price goes up to 80. They're all taking a loss at 80 or 90. What they didn't realise was I was long in both and getting deeper and deeper into it in both. And, markets are efficient, right? There are inefficiencies from time to time, but ultimately they are very, very efficient, and they squeeze you out.
I'm sure, obviously, being in that environment at the time as well, handling these emotions of other people, again, being put on the pedestal, not only from the Barings side, but also within the floor, no doubt.
And at home.
And at home, yeah.
Yeah, because my wife was living the lifestyle. She's enjoying life, and you don't want to tell her that it's all a tissue of lies either. So, you've got it, like wherever you look, you're dealing with this all of the time. Like you go down the pub or something on a Friday after work, or maybe on a Monday, Tuesday, and everybody on the trading floors talking about the trades they did that day, and like this was a brilliant trade and whatever else, and you're listening to it, but you're zoned out because you're thinking about what a shit day, excuse my language, but what a poor day you'd had earlier in the day, and you're concealing that, and your situation's only getting worse, and you've got to put a smile on, and it was a great day. But it was nothing but, it was nothing like a good day.
What was it like for you in terms of, outside of work, once the floor's closed? What are you doing?
So again, all about avoidance, so there's lots of alcohol. Alcohol was a constant companion, a growing companion throughout that process. So it was easier to try to black things out or blot things out. But again, avoidance, right? So we went away most weekends. There's an island next door to Singapore called Batam, an Indonesian island. Sometimes we'd get the boat there. And so, again, avoiding what's going on in Singapore, getting away, getting some form of headspace that's a little bit free. Maybe we fly to the Philippines or Hong Kong or Thailand. It's quite cheap to get around at that time. So in those sort of areas. So, everything was about avoidance, right? Everything.
And when it did finally start to come to a head, obviously I was just telling you the story on the way here, which was fascinating to me because obviously I knew we had this podcast scheduled in, and I was on the plane. Up until this point, I hadn't heard the story. I'd heard the name Rogue Trader. I'd heard of the movie, but I'd never gone into it. And I was on the Emirates plane, and I said there was a playlist from all the music, etc. And on 1995's playlist, the summary had Nick Leeson Goes on the Run. Yeah. And I was like, it's such a fascinating thing. It was that much of a bigger deal at the time that it's in the highlight of 1995's playlist on Emirates even to this day. But what does that actually look like? Like, what does that look like to you? Was it a case where you just wanted to get back to the UK before anything started to happen, or?
Yeah, well, we left Singapore on the 23rd of February, 1995. So it was the first time somebody had brought me a position reconciliation, right? And there's no way to explain it. That's the simple reconciliation that I said a 5-year-old could do. So I'm confronted by that in black and white, make an excuse, I'll be back to you in an hour or so, go home, pack my bags, and leave for the airport. And the only place you can fly to without a pre-bought ticket is to Kuala Lumpur. So we flew to Kuala Lumpur, stayed in a hotel overnight. Next morning, I see somebody from Barings in Kuala Lumpur. So realise I want to get out of there fairly quickly. The plan was to go and meet one of the other guys from the trading floor, one of the order fillers, who Jason also knows, and find out, quite how bad it was, right? I didn't expect the bank to collapse. I knew there was going to be a loss. Could roughly quantify it, but didn't expect that to cause the collapse of the bank. I didn't know what the capital base of the bank was. So we can't get to Phuket, which was where we were trying to get to. Obviously, there's a couple of phone calls I've made back to people in Singapore. They're telling me it's bad. The story's still evolving. Nobody really knows what the position is, what the loss is going to be, and all that sort of stuff. Then, over the course of the weekend, they're trying to rescue the bank. But again, for all those pre-mentioned reasons, nobody really understanding what the position was, they weren't able to rescue it. So I end up in Kota Kinabalu on the Friday afternoon, the 24th of February. I go down into the local newsagents in the hotel, and the headline is British Bank collapses on the Asian Wall Street Journal. So read it, realise that it's all me, and you're then watching Sky News and the like on TV, which have only really just started around that period, and the story's starting to evolve. The plan, I suppose, I was either going to go to Australia or New Zealand or back to Europe. So the plan was to get to an English-speaking country and then see what we had to do from there. What I didn't want to happen was I didn't want my wife at the time to be arrested in Singapore. I didn't want her to be in prison. Didn't want her to be under pressure. So it was important that I got back to somewhere where, I'd be arrested, but she'd be okay. So so after a couple of days in Kota Kinabalu, I actually went water rafting one day, and that's how bizarre it was. Didn't realise Interpol were on the hunt for me at that time, realised that I needed to get back, and so decided to get on the next flight back to Europe. The only flight that was leaving Kota Kinabalu went to Brunei. From Brunei, it went to Bangkok. From Bangkok, it went to Abu Dhabi, and then from Abu Dhabi, it went to Frankfurt, which is where I was arrested. Going through the airport, even they knew I was in Malaysia. That had been written about in the newspapers. So crossing the border at Kota Kinabalu, I let my wife go first because I expected her to get through, and then me to get stopped. But they let me through. So bizarre. I don't know why. I can give you some stories about why afterwards, but I think border control isn't as strong as people imagine. And so
especially back then.
Back then, yeah. Well, even now, to be honest, I'll give you some stories in a minute. But so get on the plane, go to Brunei. There's a layover of 8 hours. So when you look around, all the TVs above your boarding gates have got pictures of me on it.
Wow.
So, so we booked into this hotel that you can stay in Brunei airport, just like a day hotel.
Inside the hotel.
Inside the airport, sorry. Yeah, so it's downstairs in the airport. So we booked in there, stayed there for 8 hours. And then eventually you've got to do that, that walk where you're going to the boarding gate. So as you're going around, Brunei airport was circular. And above every gate, there's a TV with pictures of me on it. So I've got the collar up, I've got the baseball cap on, probably got a coat on or, trying to get that up as far as possible as well. So managed to board the flight. Then as we sat on the flight, the stewardesses come round with newspapers. So it didn't matter if it was an Italian guy sitting here or a French guy sitting there or an English person sitting there. Every newspaper had my picture on the front page of it. So then you got to sit on the plane with everybody looking at these papers. Just bizarre how it all happened. Then in Bangkok, we have to get off, change planes. Same in Abu Dhabi, and then arrested when I got to Frankfurt.
What was that like for you then? At the end of this crazy feeling.
Yeah, I think it's easy to come out with cliches, right, and say, it was a sense of relief and stuff. It wasn't. You're going to prison, and you've got all of the, worries about what that's going to entail. I'm going to prison in Germany. As it turned out, I was there for 8.5 months. Lot of serious criminals in there. It was around the time when the old Yugoslavian states were all breaking up. So there's a lot of Kurds in the prison and lots of Yugoslavian or different parts of the Yugoslavian nationality or religious parts that didn't like each other. So it was quite a dangerous place, the German prison, and I was remanded there for 8 months. But tough, yeah. Like I had a cell on my own. I had a TV. I wrote the book Rogue Trader whilst I was in prison in Germany. But I needed it to pay my legal fees. I mean, my legal fees were best part of £1.5 million over that period. Yeah, I had a lawyer in England. A lawyer in Germany and a lawyer in Singapore over that period.
Did you also have to go to prison in Singapore as well?
Yeah, I was extradited back to Singapore end of November 1994, and I was sentenced to 6.5 years in prison on the 2nd of December 1995 in Singapore.
And then, if I'm not mistaken, did you when you were in prison, you got cancer as well, right?
Yeah, I had. I was diagnosed with cancer in August of 1998. So I still had 11 months of my sentence to go at that time. So I had an emergency operation to remove a tumour whilst I was in prison, and I had 6 months of chemotherapy whilst I was in prison as well.
Wow.
So, don't call me lucky for no reason.
Yeah, this is true. Wow. But it is an absolutely incredible story, and it's easy to say it's an incredible story, obviously hearing about it and just getting to view it on a movie or hear it from yourself or read it from a book, but obviously to live that must have been extremely...
you take one day at a time, really, and you move forward in that way, and slowly over time your horizon can become a bit longer. And it's, it makes you stronger. Would I have preferred not to go through it? Absolutely. The embarrassment, it embarrasses me to this day, but I can't let it define me. Do you know what I mean? So that's why, I have no problem talking about it. There's no emotional baggage with talking about it. Somebody asked me the other day, is it like it happened to somebody else? No. No, it happened to me, and it was prison, especially the Singapore side of it was really, really tough, really, really tough, because how long you're locked up for, and you're reasonably okay with numbers, and you arrive in a Singaporean cell, you're locked up with two other people who are both triad gang members.
Really?
Yeah, you sleep on the floor's rough and uneven, you're going to be locked up for 23 hours a day. It's very hot, gets hotter during the day. It's actually hotter at night than it is during the day because the heat rises. So everything is tough about it. The food is awful. You get one visit. All of the people that visited me are coming from Europe, so you probably only get one visit every 4 months, 4 or 5 months or so. So there's nothing that's easy about it. But and you work out at the beginning when you get there, you've got about 1,100 or 1,200 days of this, and that's psychologically that's tough, right? Because that's a long, long way. But you break it down, and you develop simple thought processes to try and improve that. So. I used to be able to send one airmail a month, and I'd send it. It was broken down into pieces, and the main letter would go to one of my friends, who could then send another bit on to another group of friends, etc. And then they all kept writing. So on a Monday, you get up and you think, oh, okay, I might get some letters today. So, but then if you didn't get a letter on the Monday, you'd then think, okay, well, I've got a better chance of getting a letter tomorrow because it's gone from 1 in 5 to now, 1 in 4.
Yeah.
So, just develop the processes that way, that break it down a little bit. Used to do a lot of reading. And then after about 1.5 years, they gave me some work. So, I was washing up a few bowls, and there was they had a factory that made school kids' school uniforms. So I was doing that for a little bit as well.
Because I think, obviously, a part of that whole ordeal from the trading side, you're obviously stressed. Like this, as you say, you're black, trying to escape all the pressure, and there's no escape. Each day is just a new day of, as you say, being on edge and trying to get out of that hole. To then, you would think there'd be a sense of relief once it's over, but then it just starts a whole new period. Yeah. For almost the same amount of time, if not more, right?
Yeah, and it's probably more scary, to be honest with you. Because you're, like in Singapore, the prison population is very young, but everybody is a triad gang member, right? So you've got to learn how to behave. Now, I'd lived in Asia long enough to know how to behave, but there were certain, Europeans that would come into that environment and not know the concept of face, which is, the way that Asians, particularly triads, react to each other. And there's ways that you behave, and if you don't know those, you're going to get beat up on a fairly regular basis. But luckily, that didn't occur to me. You know, I was kind of, you know, I always joke that, you know, they always believed that I'd stole 2.2 billion Singapore dollars.
Really?
Yeah. So
I was going to say, did they know you were a famous?
Yeah. So I was on a pedestal. You know, in their eyes, because I was this uber criminal that had got away with all of this money, and you know, it was a huge sum of money. You know, nobody else had done that amount of money, and I didn't really.
You want to correct them?
I didn't explain it to them because it got me through the process. You know, it meant I was, you know, like a triad gang is set up on. It's almost like an army thing. You have a general and then you have the fighters who are down the bottom. So I was kind of at general level.
They had that respect.
Because you know, years later, obviously they'll read about it and see that I didn't take any money, and they'll all be like, "We should have beat that fella up."
man. It's like you said, the look once again. But in terms of the losses, I know obviously everyone talks about the 1 billion in terms of losses.
Yeah.
If I'm not mistaken,
I think you overstated it, but
but is it a case where that the losses that you had made were a certain level, but then they didn't close it and they left it to run, and it ended up being more?
Yeah, there is that perception to it. So what happens with a lot of these episodes is that Goldman Sachs are left to unwind it, right?
Okay.
Because you need somebody who's got who knows what they're doing, has a bit of liquidity themselves, and is able to carry some exposure. You can't give it to a couple of small houses that are all going to be competing against each other, or one that doesn't have enough capital base to do it. So Goldman's tend to be the banking conglomerate that are used to unwind most of these things. So the total loss in sterling is £862 million. So it's $1 billion US roughly. Yes. That's where the billion comes into it. The Board of Banking Supervision report, I believe, shows that from the time that the losses were taken, from the time that the positions were given to Goldman's until they were all fully unwound, there's a $90 million FX loss included within that. So that was never hedged. But Goldman's will have done very, very well out of the unwind.
I can imagine.
And I was in Zurich a few weeks ago at an event for an organisation called the YPO, the Young Presidents Organisation, and it was some guys who came over from Singapore and from other parts of Asia. And there was one guy there who worked for Goldman's at the time, and Goldman's had allegedly a lot of the other side of the position anyway. I don't know if that's true. I can't really prove it. It wouldn't be completely wouldn't be beyond the scale of belief anyway.
Yeah, no, it makes sense. And for you after that though, in terms of trading, like you trade personally now.
Yeah.
Did you ever think you would trade again after that experience?
I think trading's a bug you never put down. You know, whether you're away for a short period of time, you kind of know what market levels are. You know, where currencies are trading, things like that. It's just an interest that stays with you. You know, no 2 days are the same. So, you know, it's always got that fascination and interest level because it's always and constantly changing. So I think those are all really positive things and keeps you in tune with what's going on. And I'm not going to start plastering.
Yeah, that's not going to happen.
No, I'd be rubbish at it. I'm useless. My wife laughs because, you know, the only tool we have in our toolbox is a hammer, and she thinks I hit everything with it.
And it works. The luck comes through and it works out.
Yeah, no, it doesn't. Really.
But in terms of trading, obviously because you're trading on behalf of Barings, essentially other people's money.
Yeah.
Was there ever a case when you started to trade for yourself again afterwards, where you started having those feelings, you know, the sort of when you're taking some losses or anything, or it's kind of a separate thing?
No, I think you always have the feeling. I think you always have the feeling, and you know, I think you're more conscious of patterns. You know, if you are, you know, if you know, like trading anger, or you know, trading with anger, you know, revenge trading, whichever sort of process you're going through, and it's very easy to do. You know, like, you know, you're boiling up and you hit that tilt factor, and some of the rationality goes away. You always see that, right? And you see it, like there's a couple of guys I mentor at the moment, and you see it in everything they're doing. You know, they're trading one lots all day long, and then all of a sudden you'll see a trade go through for 20, and you're like, you know, what happened there? And it's just, it's not gone from 1 to 2. It goes from 1 to 20, and you know, sometimes they're lucky, sometimes they're not. But you know, it's, you have to discourage people from doing that sort of stuff. I think the problem for the retail traders, or my biggest, or I think the thing that affects more retail traders than anybody, is just that emotional attachment. It's, you know, you've got to work out ways that you can distance yourself from it.
Do you think a large portion of that emotional attachment comes from needing the money they're trying to make from the market?
Yeah, and if you need to make the money, that's dangerous already, right? So you, I think you need to get yourself to a position of enough stability that it's not as onerous or needed as it may be. I mean, you know, you see so many of these get-rich-quick schemes, and you know, the marketing that goes on around some of the ways that people trade is just beyond the pale. You know, it's just so wrong. And there's a lot of short-termism, as we've discussed over the last period. It you know, and this is just like from a business and from a trading perspective, it's not about instant returns. You've got to be in the game for a period of time, and you know, that's important. It's not, you know, a lot of people I think are looking for get-rich-quick schemes, and they're just not there. But people keep, you know, suggesting that they are, and people unfortunately believe that.
I think it's their human nature. It's what they want. It's what they desire. Yeah. So when someone tells them what they want to hear, they just opt for it and try and believe it.
We're of a different age, right? And this is probably one of the biggest changes over the decades. Right now, everything is about instant gratification. You know, it's about having it now, and you know, having it bigger and better than previously. Whereas, you know, not that I totally adhere to this, but you know, we used to have to save up, and you know, it does instill a different, and that's a worry just for society in general these days. The instant gratification that's out there.
I think so. No, 100%. It's a very, very valid point. I actually put out a short form piece of content recently where basically I was saying how it's impossible for you to fail. That's the nature of short form, is you have a hook. So I said it's impossible for you to fail in this day and age because you have access to absolutely everything that you could possibly want, in terms of mentors, in terms of education, in terms of you know, free, even for free. Like the amount of free resources available now has never been the case before. But equally, someone reacted to that, made like a video where they're reacting to what I'm saying. I was talking more of a general perspective rather than just trading. But they gave a perspective that's very valid, though, alongside that. Like, equally, if someone has that mindset where they go out and work, and you know, and they use these free resources or all these resources to their disposal, yes, they'll probably learn and grow. But the reality is that what's happened is, because it's all so readily available, because it's so easy now to have access to all these things, people's mindset is just so broken and lazy that they're not willing to do the work, versus, say, the last generation would, you know, to get that access to knowledge would have to go to the library, for example, read a book and go through that book. And you might not have access to all of that there either. And it'd be very limited. So they would have to push themselves, and they would have to work much harder to achieve these things. But it made stronger individuals, stronger and more 100%. Successful individuals in the end.
Just to give you an example, and I'm not bigging up my generation or me in particular, but you know, I started working in the bank at the age of 18. I still used to mix up cement for my dad on a Saturday and Sunday. You know, just because I wanted that extra bit to to push me on, and
Yeah.
you know, needed the extra cash. But I was getting well paid in the bank. But on a Saturday and Sunday, I'd still be seen in Tottenham mixing up cement and you know, just bonkers stuff.
So knowing you've done that, and then when you hear people like in the retail space, as you can, I come across as many retail traders as you can imagine, and there's always one story I've always told, which is this one trader I met. I say trader, someone who wanted to be a trader, who I met, and I said, like, what do you do at the moment? Like, what is it that you're doing in terms of work-wise? He goes, I don't work. I said, why? And he goes, I tried to get a job once, and it wasn't for me. And I was like, what do you mean? He's like, yeah, I'm not made for a job.
Yeah.
And I was just like, what is that? How does that mindset reflect into trading then? Do you think that, you know, trading's just this easy thing? Because I, for me, it's always been a case of like, to be successful, you have to be the hardest worker. Like, you need to be a good employee to ever be a good boss or an entrepreneur.
Yeah.
That's been my mindset. But then when I look at a lot of people that I meet nowadays, especially younger people, they just, one, they don't know what they want, which is kind of not natural, I guess, at that age as well. Like, not to know exactly what you want to do, cool. But they're not trying to figure out what they want to do either. Yeah. But equally, they just don't want to work. Like, I remember I tasked one of my my wife's cousins. He was very young at the time, like maybe 16, 17. And I said, I'll give you this book. And I think it was The Alchemist or Richest Man in Babylon, one of the two. And I said, just read this book. I'll pay you £20 to read it. He said, nah, I don't want to read. And I was like, what else are you doing? He said, nothing. I said, so why don't I just read this book and you get £20? I was just trying to help him. I was trying to like push him in a certain direction. But it just showed me the mindset. It's just so skewed. Even between my age, like, it's a 10-year difference between me and him, let alone obviously anything beyond that. And I think it's such an important fact, as you said, is like, one, if you need the money in trading, that's a recipe for disaster. Yeah. But equally, if you're not willing to then, make a bit of sacrifice where you work to create that income, where is that progress going to come?
I think if you need the money, you're putting too much pressure on yourself already, and that's going to influence behaviour and decisions that you make. I mean, I think you're right. I think work ethic, as I describe it, is on a decline at the moment. But hopefully it'll pick up.
Hopefully, yeah. I think it's that classic thing though, like kind of very similar to the analogy we've used earlier, where bad things have to happen sometimes for people to learn lessons and progress to be made. And I think that's kind of an era we're in now across the world as well, not just the UK, like everywhere. Yeah. It's like we're seeing such turmoil. The markets don't reflect that just yet. No. The markets are all-time highs, which is probably classic though. But it seems like we're going in a direction where the society as a whole is very much soft. And unfortunately, hard. It's like that classic saying, right? Hard times create strong men. Yeah. Strong men create easy times, and then easy times create weak men, and we go around in that circle. And it seems we're on that weak, the hard times bit is probably yet to come. Yeah. Unfortunately, but or fortunately, depending how you look at it. And I think that's very important, though. As you said, it's like you don't look at your what you've been through as like, and victimize it or feel victimized by it or use it as a way to be, that's such a hard thing I went through, even though it was hard, and you know that, but you use it to move forward.
Look, it was all self-inflicted. I knew what I was doing. I knew I shouldn't be doing it. I continued, and therefore, I'm fully accountable and responsible for that period. As much as I hate it, and it will always remain the most embarrassing period of my life. It's I can't wipe it out.
But as you say, accountability as a trader, and we're going to finish up on just some like trading, brief trading topics. But do you think accountability as a trader is almost necessary for success to be a trader? Yeah.
I mean, discipline. You need to, have that structure to your day as well. You need to be able to analyze and to review the stuff that you're doing. I mean, there's so much good stuff out there from people who've traded, from my generation, I suppose, but and there's a lot of good stuff out from people who've been very successful over the last number of years as well. But a lot of it comes down to the discipline of the trading. That emotional detachment, I think, is key, and I think you'll hear most traders say that. if you can take some of the emotion out of what you're doing on a day-to-day basis, and you as we spoke a little bit about earlier, find that niche. Everybody's trying to do the same thing, but you've got to find that niche. So having that courage of your conviction, if you see something that's wrong, it could well be.
And you mentioned earlier about tracking your trades. How important is that to a trader as well, like to be able to track their performance and their past trades?
It's vital, I think, because you're going to find, like, I trade a lot around the opening bell, and when I am trading, and the reason is, I think, if the market doesn't immediately, because you've got so many market on open orders, you've got some stops that may be triggering around the open, so you've got good liquidity. I think you have good two-way flow. So unless you hit into a trend immediately off the bat around the opening bell, I think the markets can be a little bit more forgiving there. So I tend to trade in that hour around the opening bell in the morning, and again in the afternoon around the US Open. So DAX in the morning, US Open in the afternoon, and try not to be in the market too long. So I think I was looking at something that somebody put on one of their feeds the other day, but almost becoming a lazy trader, if you like, focusing on those areas. You're going to get volatility around the open. You're going to get a price movement. You've got the potential to make profit in there. You're not sat around all day and getting too heavily involved in what's going on. I think the shorter periods that you trade, aid that emotional detachment. And there's definitely things that you can incorporate within your trading day.
Are you a short-term trader? Did you trade?
I day trade. I don't carry, unfortunately, because of my history, I was, I like to sleep at night. And I didn't do a lot of that during that time. When you've got 100,000 options and 60,000 futures, you want to keep away from carrying positions overnight. So mine is short term. Yeah, it's just day trading, but day trading specifically around those. Those
fixed instruments and fixed times.
Yeah.
Are you trading futures?
I use CFDs.
Oh, CFDs, yeah.
Yeah, so they're as futures-like as you can get.
Yeah. Incredible. And one thing that you just mentioned there in terms of the lack of sleep, do you feel like it's hard to make clear decisions when you're in a moment like that, when you have such emotions, such pressure, lack of sleep, the alcohol as well? Like, as you've been able to reflect on, you mentioned about reflecting on the immaturity, reflecting on not asking for help. But in reality, when you're in that, it's not to give excuses, of course, but we're just like looking at it and observing it. And the reason I'm doing this actually is more so the audience-wise. A lot of people in the audience don't have routines. They don't have that discipline, A lot of traders in general, retail traders, don't have that routine or discipline. They don't have... so they, as a trader, our whole job is to make quality decisions, right? Consistently, which is hard to do anyway as a human being, let alone in financial markets where emotions are heightened anyway. But I was just thinking about that, where for you to think clearly to that point, it's hard to do as well when you add on all this mixture, this cocktail of different factors that don't really lead to quality decisions being made or clear decisions being made.
Yeah, no, 100%. I mean, you need to be at the top of your game, and if you're and again, going back to a point I just made a minute ago, if you're trying to make those quality decisions over an 8 or 10 hour day, they'll improve over a 3 or 4 hour day or a 2 hour day, because you've got less time to concentrate and work on what you're doing. And, the recording of the trades, the reviewing of the trades is going to show you when you're most profitable. That's the key part of it. And there's no mad science in that. You've got liquidity, you've got price movement, and you've got, hopefully you've got profit at the back end of that. And tracking that sort of stuff is vital.
Do you feel like the tracking side also helps with the emotional detachment? Because once you understand the numbers of your trading, as you say, like what times you're most profitable, how many trades you're taking, even what your losers look like and how often the losers happen. Like once you can actually see that statistically and from your data, it can help you not fully emotionally detached, but it's one step closer to that detachment.
Yeah, absolutely. Absolutely. And I think it's impossible to do unless you do that, really.
I agree. I agree as well. Well, Nick, again, I really appreciate you being here today. I really enjoyed our conversation.
Good.
I know the audience have as well. Drop a comment with your biggest takeaway from today's episode. I know there was so much to go through. But links for Nick, if there are any, will be in the description below. So make sure you check those out as well. We are actually going to be going into a round table, not straight after this episode. Luckily, we have a little break. But epic round table with Nick and other trading veterans and legends from the trading pits and from a glorious trading career as well. But there'll be other episodes on screen, so check those out and hit subscribe. And until next time, everyone, take care.